Alright, welcome on YouTube. So, it's a boy Chill by Latin, and today's video is about what is market structure. So, in trading, if you don't know market structure, that's where I don't believe you understand trading well enough if you don't know market structure. You see what I'm saying? So, what is market structure? Market structure is is the way price move over time. The market only does three things, honestly. As me I say, the market does do three things. Market go up, it go down, and it go sideways. As me I say? So let's continue. So market does three things. It go up, it goes down, and it moves sideways. Understanding market structure helps you identify trend direction, who is in control of the market, and when to avoid bad trades. So as we said, they got three structures in the market. When market is going up, it's going up, so that's a bullish trend. When it's going down, it's a bearish trend. When it's ranging or consolidation, when it's going sideways. So, bullish market structure, uptrend. A bullish market structure is defined by higher highs and higher lows. So this tells us that buyers are in control. As long as a higher high are respected, the trend remain bullish. In this condition, traders should focus on only buy opportunities, which is true. So let me show you an example of what is an bullish trend. So right here on my chart, right, I got a few examples of all the three things that market does. Oh, sorry about that. Focus up. Why this again? Sorry about that. So uptrend, as you said, market is making higher highs, higher lows, higher low, higher high, higher low, higher high, and it caused by how to identify it's a valid uptrend. You get this called break of structure. So a break of structure is when when market break above a higher high to give you a next higher, to form a higher high, then to come form a higher low, then break above that next higher high and give you a break of structure. So that is when you know that market is in an uptrend. And let me give you a few more examples of an uptrend, how to identify an uptrend in the market. So boom, you have this. You have market doing things like this in the market, right? Price is doing that. It's identify itself as a higher high, higher low. So we're making higher highs in the market. So we have this push up, we give you this high, push up, we give you this low, higher low, because market is moving from this low right here, for example, right? Push up now, we break off, so we give you a break of structure right there. It breaks structure right there. Break structure right there, and it give you a higher high right up here. So you get these higher high right there. So market confirmed that it's in a bullish trend, right? All of these higher highs and higher lows. All of these shit. So why not change? Oh. So alright. So all of these structures right there. Market push up give you a higher high, push down give you a higher low, push up give you a higher high. Reason why this is a higher high, it's higher than this high right here, and it give you a breaker structure to confirm that market will be going up. So in other terms that people use, you can use to identify when the market is in an uptrend, is by using a trend line. So the market from this high right there, right, from that higher low right there, sorry about that. You mark it from that higher low right there, right? And then you'd have something like this. The market would have respect this, right? So price push up, it come respect this trend right here one time. It push up, it give you break of structure right here and give you form a higher high. It push down, it give you a higher low. It don't break past this trend line right there, so it give you that momentum that market will be going up more, will be going further. It push up again, it push up again, and it give you this higher high right there, and then it push down and it give you that higher low right there. So that confirms that the market is in an uptrend, and you're only going to look for buying opportunities. So you're gonna catch a trade off a uptrend. You're gonna wait for price to break the structure and give you form a higher high. It's gonna give you a correction. And when you do a correction, whatever strategy you trade is either supply and demand, support and resistance, trend line, any one of them. The market gonna come and pull back to one of the zones that you got marked. For example, right there, price come respect it, that zone right there, and then push up to give you this continuation. So if they get this correction, you're gonna get this continuation to the upside. The target would have been this higher high. Cause what you want price to do, you want price to come and break this higher high to form a next higher high to show that the market still want to go up. All right. Hope you guys enjoy and understand that structure. You can screenshot this right here to get a good understanding of it. You see me? So yeah. So let me do. So that's an uptrend. And as I said, in an uptrend, you want to look for buys. No sells, just buys. Alright? So bearish trend, downtrend, bearish market structure. In a bearish market structure is defined by lower lows and lower highs. This tells us sellers are in control. As long as lower highs are hold, the trend remains bearish. Traders should not focus. Traders should focus on selling opportunities. Alright? In this market now, we have this right here. Let me delete out these right over here and make it better. Give me a minute. 1 minute. Alright. So downtrend. Bearish market. So when the market is in a downtrend, we look for lower highs and lower lows. So price push up, it give you a lower high, it breaks structure right there, it give you a lower low. So price would have break structure right there, give you a lower low, come to form a lower low to give you a correction to form a lower high, and then when you form this lower high right there, it give you this continuation, break structure, give you this continuation and form a lower low. Then you see market doing a pullback, is giving you a correction. This correction means you want to form a lower high to give you this continuation. So when you get this lower high right here, it give you another breaker structure right there. So that's confirmed that the market really want to keep that momentum of going down. You want to keep in that downtrend. So let me give you an example right here again. Alright, then I'm gonna go on the chart and explain. Alright, so price give you this. Oh wait, shit. Let me start up here. So price give you this. Price is doing this. I'm gonna fix it. Sorry. Price is doing this. Price is doing this. This is a downtrend. How to identify a downtrend? Let's use this right here, the trend line. Trend line, respect that. So this trend line identify that the market is failing to break above this trend line to come take out these highs. So you know that the market is in a downtrend. So as long as the market keep the momentum of failing to break these lower highs right there, you know that the market is in a downtrend. Other thing to confirm that the market is in a downtrend, break of structures. You see me? Price is giving you these right there, break of structures. Oh shit. Sorry about that. Price is giving us break of structures. So whenever you get a break of structure, that means the price is willing to go back down. As it is willing to go down, it push up and give you a next break of structure right there. Price is willing to go down. So that confirms that the market is in a downtrend. So yeah, another confirmation to show that price is making lower highs and lower lows. So we have right here a lower high right there, lower high, lower high, and a lower high, and we got over here a lower low. So whenever you see in the market and you want to identify a trend, if you cannot look on the market and identify what trend the market is in, that mean you don't make sense to trade. Alright, so if you can identify that the market is in this trend, a downtrend, price is making lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. You see me? So if you cannot identify this right here, that means you cannot identify what trend the market is in. If you can identify either an uptrend or a downtrend or a ranging market, you see me? If you can identify any of these trends that the market is trending in for you to get a trade, that does mean you cannot identify any form of trade. You see me? You don't make sense to trade. You'll be trading if you don't understand when the market is trending in either uptrend or a downtrend. So saying that, hope you understand this example of market structure of a downtrend. So you can screenshot that and leave it right there. Few seconds, you can screenshot that. So that is that. And now we're gonna go on to the ranging market, right? And a ranging market is when a ranging market, see, range or consolidation. A range occurs when price moves sideways between support and resistance. There is no clear direction and no clear control. Traders can either trade the range extreme or wait for a clean breakout. Beginners should usually wait. Not usually, beginners should wait, because if you're a beginner trader and you don't understand how to trade a ranging market, you're going to be a losing trader. You're going to be on a losing streak. The market is going to go and take your money. So let me just give you an example right here. I have an example, a simple example. Price failing to make higher highs and higher lows. Price just stuck right in between these zones right there. Right? Price stuck right there. And price stuck right there. Price failing to break below or above these zones. So it's stuck in between a support and a resistance. Right? Price stuck in between those zones. So this example right there. So price is doing this. You will see price even do that. And then fail to make that. Fail to go back there. Do that. Do some. It's just moving this way. Price just moving like that. Right? So price is stuck between support and resistance. So price in between support and resistance, meaning price is just going in a sideways direction. Price not giving you nothing like this. Break out and start to give you a trend to the downside, or break above and start to give you a trend to the upside. Price is not giving you that. So this is a market that you don't trade. You don't trade. So ranging market or consolidation market, which whenever you know it as, you don't trade that market. So you can look at this and screenshot this to understand what a ranging market is or a consolidation market is. So only way you should trade this market is if you are an advanced trader and you trade this market already and you trade support and resistance. So you don't wait for price to come down to this support right down here. So price push down to this support and you wait for price to react off this support right there. Push up, you're going to target this resistance level right there. And just like that. So you got to be like a scalper or something like that type of trader. But we don't normally trade this price action. We don't trade this price action. We go on the market. If we see the market is doing that, we're going to wait for a breakout. It's either it's going to break to the downside or it's either it's going to break to the upside. So we don't trade sideways market. All right. So let me give you guys a few examples on. Let me give you guys a few examples on when a market is in an uptrend. All right. So examples. So right here, you can see what the market is doing right there. Market is in an uptrend right there. So right here you can see, oh shit. Right here you can see the market is in an uptrend. Right? Uptrend. Price is making higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And you want price to come from a higher low now to give you back this higher high, to give you a confirmation that this market want to go further up. You want to go, you want to continue this bullish move. So you want price to come here, form this higher low, and then push up to take out this higher high right there to give you a breaker structure right there. All right, so that's the trend, an uptrend example in the live market. And we can think I can find a downtrend right there too. Now that's example though, but let me find a downtrend for you guys. All right, so right there, price is making, as you can see, price is in an overall downtrend. Right, price is making lower highs and lower lows. So if you see right here, you can say price did this, make a lower low, make a lower high, make a lower low, make a lower high, make a lower low, make a lower high. It come, it form a lower low, it come, it form a lower high, and it continue lower low, lower high, lower low. It continues. So this would be a downtrend that the market is in right here. You see me? It's forming lower highs and lower lows. So that is a bearish market right there. So yeah, that's that. I hope you guys understand that example. Let me try and find a consolidation market now where price consolidating. So this, I think this one is consolidating. All right, this right there, as I said, you see this price is ranging right there. Price is just ranging right in between those two zones right there. So what they say, what you do, they don't trade, and this is on the daily time frame right there, as you can see. It's on the daily time frame. We don't trade these market because price push to support, push to resistance, push back to support, push back to resistance, push back to support, push back to resistance. You did get a breakout right here. So normally when I get a breakout, you want to see price respect back that zone and then push up. But guess what it did? They give you a breakout and then it's pushing back down into this zone. I don't know what it want to do. It probably can want to respect a structure right here, respect a zone, and then continue to buy it. But price is giving you this. That's a ranging market. That's a consolidation. In these markets, we don't trade consolidation. We don't do that. All right. So next one, we got the break of structure. Break of structure. As I was explaining, break of structure. Let me give you the example. The meaning of break of structure. A break of structure happens when price breaks a previous high in an uptrend or a previous low in a downtrend. This signals trend continuation and confirms that market direction. BOS is confirmation, not prediction. So whenever you see a break of structure, that means the market want to continue. If you're in an uptrend, like you're in this uptrend right there, right? And you see price do this, break this, it give you a break of structure. What you want to see price do is, it's not going to happen all the time, but it did happen though. It didn't push come back below it, but normally what you want to see price do, you want to see when price give you a break of structure, come back and respect one of your zones and then continue. But that don't guarantee it's going to always come back down below the break of structure. But this would have been a break of structure. This give you the confirmation that price want to push, go up. The price break this structure right there, get your break of structure right there, push up, give you a higher high, it still give you a higher low right here. And what it did again right there, break above this high again, right? It break above that high again. Let me use this one instead. It break above this high, and above this high you get another break of structure. Price boom, push up, it push come back down, it give you a higher low. Reason being, it's higher than these lows. This low is higher than these lows. Higher high, these highs, this high is higher than these highs. So you get a higher high. What price did again? Price come back. It give, why me I use that one? Price come back and it give you this again, another break of structure. First price go through, price fail to break it, push back down, but yet it still failed to break below this low. So it's still a valid uptrend. Price come back again, break right through it, close above it, give you a break of structure, push up, give you a higher low. So that would be a breaker structure in an uptrend. In a downtrend, same thing but vice versa. Price break lower lows. So price break that lower low right there, give you this break of structure right there, meaning price form this lower high, push down, break this lower low, push down to form a lower low, now push back up to form a lower high, then push down again and break this lower low right here, push back up, form a lower high, push down. After you form this lower low and break through it, you form this lower low right there and push back up to form a lower high, then push back down again and break this lower low to come down all the way down here. Form this lower low, push back up, form. You see, just like it's a simple trading structures. If you understand these structures right here, you're good in the market. The market is so easy to trade for you. So the next structure that we got is a market structure shift. And a market structure shift occurs when price breaks structure in the opposite direction of an current trend. This can signal trend X. Sorry about that. Where was exhaustion? Alright, maybe start over. The market structure shift. What is a market structure shift? A market structure shift occurs when price breaks structure in the opposite direction of the current trend. This can signal trend exhaustion or potential reversal. A shift does not mean immediate entry, but it signals traders to pay attention. Yeah. So when you get a market structure shift, otherwise known as MSS or change of character, all of them is the same. So when you get a market structure shift, it's tell you that an uptrend want to become a downtrend. So let me give you an example. So you have this right here. So you have this. So for example, market is in this. Oh shit, what am I doing? Alright, for example, market is in this uptrend, right? Market is forming higher highs and higher lows. Then boop, market go below that higher low right there. So when you see market go below this higher low right here, you call this right here a market structure shift, otherwise known as MSS. So you get that market structure shift right there. What if you guys did been seeing this thing right there? Sorry about that. Should consider that before, yeah. But you get this MSS, this market structure shift. So this doesn't mean you're gonna enter after this market structure shift, as it said. This means you're gonna open your eyes because you want market to do something like this, to pull back, and then it start to form lower highs and lower lows. So you want the market to shift from an uptrend to a downtrend. So whenever price break below a lower high, it gives you a signal that price want to reverse. Price want to start to make lower highs, don't want to continue this uptrend, you want to maintain a downtrend. So this signal that price want to give you a reversal. So that's an uptrend. So this is that's an uptrend example. So this is a downtrend example, right? So price is doing this. It's making lower highs and lower lows. And then price come, it breaks above. It break above this lower high right there. It's when it break above this lower high, give you this market structure shift, and this signal that price don't want to be in a downtrend anymore. Price want to shift structures and do a little retracement back and then continue to form higher highs and higher lows, right? So this is a signal to show you that price want to change trend. You want to go in an uptrend instead of continue this downtrend momentum that it's been doing right here. You want to confirm when it give you a market structure shift, break above this low high to form a new high. then to form a new higher low, then a new higher high, then a new higher low. So put that all together, you can understand how the way how market structure work, how the whole market structure combine, and you can get trade like this. So let me try find an example in the market for you guys. So all right, I cannot use. All right, so boom, let's use this for an option, downtrend to an uptrend. So as I know, this market is, if I use that, market is making higher highs and higher low. Price come right here and it form a lower low. Ah shit, what I just said. Sorry about that. All right, well, as I know, price is making lower highs, a lower high, a lower low. No, I'm not gonna use this now. Price is making a lower high, lower low. Come back, it form a lower high. Now it's forming a lower low right there. It form a lower high. It failed. As you can see right there, price failed to break below. It failed to break below this lower low right here to form a lower low. And then what it did, it pushed back. It pushed back above and it give you this market structure shift right there. So whenever it do that, it break above this lower high right here. It break above this lower high and it give you this market structure shift right there. So price give you that market structure shift. So as I said, price now form a new high right above here. And what we want price to do, we want price to pull, come back and retest our zones, whatever strategy is supply and demand zone. We got a demand zone right here. So we don't want price to come back, for example, respect this demand zone and then buy to the upside. All right, so that's something that we would want to see price do after it give us this market structure shift right here. So that's a downtrend to an uptrend example. That's a live example, like live price market now. So let's try find an next example. Let me see what this is giving us. Oh, this does it too. So this was making price, it was in a nice bullish move. Price was trending up and price reach at this point where price is making higher highs and higher lows, higher highs and higher lows, higher highs, and then, but that's an example that's not going to really show. Let me see. That's a downtrend. 25. Oh, for a downtrend to an uptrend. Alright, let me see if I can use this as an example. Downtrend, lower highs, lower lows, and price break this lower high right there. Break up, come back, respect, and then. Alright. So downtrend to an uptrend. I feel like I should use Forex to do this type of example. All of these market is in downtrend overall. And Jade, downtrend. So alright, boom, downtrend to an uptrend. So right here, price making low highs, lower low, lower high, lower low. Make a lower high, come make a lower low. It break above this. It break above this lower high right there. It give you a market structure shift. So it's the same downtrend to an uptrend example. So it's vice versa. So it give you this market structure shift. What price did? Price pull back. If you're trading supply and demand or any strategy you trade, price pull back and come respect that demand zone right there. And what price did? Respect that zone and continue to give you some higher highs and higher lows. It's shift structure again right here. Price shift structure around that region right there, basically. I would say it's shift structure right there. Give you market structure shift. And then when you shift that structure right there, you want to see price pull back and then continue down. So now it did a pull back, respect a zone, and now it's making lower highs and lower lows. So that's an example from an uptrend to a downtrend, downtrend to an uptrend, and from an uptrend to a downtrend. So I hope you guys understand that right there. You see? So simple. So our professional traders use market structure. Professional traders always start with market structure. They identify trend direction, wait for confirmation, and then look for precise entries, right? They trade logic, not emotion. Simple step-by-step trading method. Does it mean I say? Identify the trend using highs and lows. Mark the key structure point. Wait for pullbacks. Trade in direction of structure. Place stop loss beyond structure. So that's basically saying that is this. You identify the trend, right? So alright, so we're gonna use this downtrend for an example, right? We identify the market is in a trend, and we are at this point in the market where we see price break structure right there, right? So we know that it's in a downtrend and we want to see price. Now we're looking for sells in the market. So what we do is, when we're looking for sells in the market, we're gonna wait for price break this low right here. So we're gonna wait for price to form this lower low and pull back to our entry point, to one of our points that we mark. So as I'm saying, my strategy is APA. So I would mark this right here as a structure right there, and then I would wait for price to pull back to my structure right there. And when price pull back to my structure right there, I would look for an entry. Well, I'm not going to be able to go down to the smaller time frame now because I'm not going to be able to see all of this. But for example though, I'm going to look for my entry on my 5 minute, and I get an engulfing candlestick. So right there, my entry would have been right there. My stop loss would have been right there. My new target now would have been this lower low that price form right there. This would have been my new target. Or you can normally target a 1 to 2, 1 to 3 risk to reward. That's the right way to do it though. But you know, best risk to reward 1 to 2, 1 to 3. So within like 1 to 2, if you target a 1 to 2 TP smash within that day, 1 to 3 TP smash the next day, or you know, but it would be something like that. You want to target a 1 to 2 risk to reward or 1 to 3 risk to reward based on your strategy that you're going to be learning, based on your back testing, and see what structure, what risk to reward your strategy respect the most. But for example though, say that I would be targeting this, so this would have been a swing trade. Price push come all the way down right there, push come back up, then the push come back down, take out that low right there. TP would have smashed. It would have been a long while, but TP smash. So that's saying how you trade. You also want to identify the market structure. Make sure a market is in a trend. It's either trending in a downtrend or an uptrend, and you identify the price break a lower low or higher high or something. So price break this. So right here, say for example, price give me a market structure shift. What am I gonna do? As I use this example before, you trade supply and demand. You market supply, so your demand zone right here. So you want price to push come back. Reason being, you would mark this demand zone. This was the last down candle market made before it give you this market structure shift. Price push above, come back, retest it, and then you know, on a smaller time frame, you could have minimized this demand zone to like a zone like this. On a smaller time frame, price come back, respect that zone, continue to buy, and farm higher highs and higher lows. That would have been a nice trade. Uptrend, for example, you enter right there, stop loss, target, as I said, at 1 to 2, 1 to 3, take profit smash right there. Nice trade. That would, but this is a higher time frame, so it's going to be 1 to 3 going to be a little larger, but on a smaller time frame, this would have been like a 1 to something whole heap. All right, you see me? But easy, as long as you know market structure, you can identify the trend in the market. You can trade as easy as possible, and you don't do foolishness in the market. I would say you would have been more focused. If you open a pair, if I open a pair, like say for example, let me just pick one of these. Let's see if I can just go so whoop and pick one of these random pairs right there. So I open the market and I can, by looking at this market, I can identify what the market is doing. Even if I zoom out, this overall trend is like, you know, this is not really trending. It's trending, but we have zoned that market is not breaking. But if you do go in and look on the internal structure, I would see like price was going in an uptrend here for a bit, then it boom, it shifts structure, price come now, start to form lower highs and lower lows. But it's in a trend, overall trend, on this daily time frame, where from the market open right here, it's just going this. It was making downtrend right there, push up, come back, if break structure right here, break back this high right here, then it's basically in a sideways market overall. But you still can see trend within these right here. Price is making a lower high, push down, make a lower low, make a lower high. So it's in a downtrend within this time frame right here, within this price market right here. I don't know why that does that, but yeah, right there, price is in a downtrend right there. So if you can identify a trend within the market, then you're good. You know what the market is doing, what you're supposed to be looking for. So for example, you would be looking for sells. You don't want to see price break this lower low right here. You want to see price do what, farm a new lower low, pull, come back to one of your zones, and then continue to sell. So you want to see price do this and then continue to farm lower lows. So yeah, it's simple as that. Simple as that. Common mistake traders make, beginner traders make, honestly. Common mistake including trading against a trend, ignoring higher time frames, entering before confirmation, and over complicating charts with indicators. We don't use indicators, we just use strictly price action. We use strictly market structure. Whatever the market give us, that's what we use. We don't use no indicator to identify that the market is giving us this or that. If you cannot look on the market and see that the market is giving you, let me use a trending market for example. Let me use 25. If you can't look at the market and see that the market is giving us an uptrend, and we're supposed to be looking for buys within this trend right there, within this market structure right there, then we're not supposed to trade, right? We're not supposed to trade. We're supposed to just be identify the trend, don't go against. So in this market, you're not going to sell the market. You're supposed to buy in this market, not selling this market. You're supposed to get buys. As you can see, when the market is in an uptrend and it's buying, you get more price action out of the market. Look at these candles right there. And when the market is doing the selling, you get these type of selling. But when it's buying, it gives you more pressure, because the buying pressure is more stronger because the market is in an uptrend. And when it's doing a pullback, as you can see, the pullback is weak, right? Then the buying market is strong, weak, strong. So this, now you want to see this form a higher low and then give you the same rinse and repeat right there. So that's what they do. We don't trade against the trend. We don't buy in a selling market, and we don't sell in a buying market. So for example, they would say you buy low and you sell high. So simple. All right, next thing on the market, final thoughts. Market structure is the foundation of trading. As I say, it separates gambling from consistency. Once you master structure, every strategy becomes clear and more effective. That's true. I can relate to that. I was at a point where I used to trade against a trend. I didn't know market structure until I focused enough and watch videos and learn how to trade market structure. I myself understand when a market is trending from when it's ranging or consolidating. So I can just look at a chart and tell you that the market is in an uptrend or a downtrend. So saying that to say this is that focus more on learning the market structure than focusing on making money out of trading. So if you watching this video to the end, thank you. Appreciate it. Hope I get to teach you something today. Hope I get to understand something more better today. So have a good day. Like, comment, share, and subscribe. You can join my Telegram group, link in the bio, and things like that. So yeah, that is the final thought. So hope you guys understand this right here. And yeah, peace out. You know, it's Trade by Aladdin, and I'm outside.